horror stories ranging from thousands of dollars for a simple boot removal all the way up to over $100,000 for a single tractor trailer accident. Welcome to This Week in Trucking, the podcast that tells you what you need to know about the trucking market in 30 minutes or less. We'll talk about diesel prices, freight market trends, and the top stories that trucking business owners need to know. How you doing, Gurvir? How's your week going?
Week's going good. This week went by fast like many other weeks, but it's been a good week. But what about yours?
Yeah, it's good. And Friday is always my favorite day to talk about the trucking market. So let's get
Yeah.
into it. Let's talk about diesel prices. Unfortunately, I have some not so great news about diesel prices, although it's probably not news to anyone at this point. On Monday, we saw a more than 20-cent increase in the national average price for diesel. So today, as of Friday, we're looking at $4.10 as our average diesel price. Yesterday, it was at $4.09 about. And so we're staying steady since yesterday, but last week it was $3.96. So we are seeing that impact of the turmoil in different parts of the world, Suez Canal, Russia Ukraine war. These things are really affecting prices again. And so this is not great news for trucking business owners since fuel is the number one largest variable cost for their business.
Yeah. Since last month, we've seen about, I think, 17, 18-cent increase. Not so good news. Again, this eats directly into their bottom line. From last year, it's good, right? We're down almost a few cents. I think, what, 43 cents nationally on average. But last month, we were down almost 60 to 70 cents. That was great news. This is creeping up a little bit. I know there was some news out of Russia. There's low inventory levels around the globe, which could be leading to a small increase in diesel prices. I think it's safe to say that we're not going to see a huge increase this year. They'll probably continue to fluctuate around here. I would say give or take 10 to 20 cents. But let's keep an eye on this. Again, this is the biggest operating cost for truckers. And this is one of the important metrics that we're going to be tracking every week just to see where diesel prices are. But yeah, hopefully they come down in the next few weeks.
Definitely, definitely. And we'll keep an eye on the news around the diesel market because usually when you see big news come out, takes a little while for the prices to actually get affected. So we've been seeing news stories coming out about things happening in the world that might affect diesel prices. Then 2, 3 weeks later, we're seeing these price increases, particularly in the Midwest region, which I'm so sad for my fellow Midwesterners. 30-cent increase in the Midwest region, 21-cent increase in the lower Atlantic region and the West Coast minus California. And New England and Central Atlantic regions were less impacted, but still impacted by a couple of cents per gallon. The 5 states with the lowest average diesel price today are Oklahoma, Kansas, Missouri, Nebraska, and Montana. So usually we're looking at the Gulf states to know where to fuel. Oklahoma is sometimes included in that, but we're really looking at the West area and Midwest area, central of the country to find those cheap diesel prices. The
Yeah.
highest states are kind of always the states with the highest diesel prices: California, Washington, Pennsylvania, New York, and Maine.
Yeah. So yeah, if you're going through Oklahoma, Kansas, Missouri, if you're running West Coast to East, or if you're in the Midwest, definitely get your fuel from those states. I think they can boost your cash flow for that quarter if you are fueling at lower states. Obviously, you'll make it up at the end of the quarter. And then try to avoid those most expensive states: California, Washington, Pennsylvania, New York, and Maine.
Definitely. So, Gurvir, talk to us about the freight market. Is anything making up for this increase in price that trucking business owners are going to be seeing?
No, so as diesel is going up, I think the freight market is a little bit down in February as expected. Again, January and February are not the best months for freight, but I think we still saw some strong indicators. There has been an increase from last year, September, October, and November. So the National Truckload Index, which measures the average dry van spot rate for dry van in the country, we saw a small decline of about 3 cents. So last month we were at $2.32 on average. Today we're at $2.29, a small dip. Outbound tender rejection, which is how many loads are carriers rejecting from shippers. We've seen a small dip in there as well from last month, 4.96 to 4.81. And then the outbound tender volume index, we also saw a small dip in February. So All three of those indexes are moving down in February. Again, not a huge decline. There's a small dip, but I think that is expected in February. I think one of the things that we discussed was that given that it's January and February, the rejection rate is around that 5. We can expect this to increase when March, April, May comes, when there's a increase in freight and the market picks up. What could the rejection rate look like in the next few months? So I think a rejection rate of 4.81, closer to that 5 average, still pretty strong for January and February. Last year, we dipped almost down to 3. So we're still better than what it was last year, like September, October, and November. But from January, we are dipping down a little bit. So let's see how March looks.
For sure. And if people want to know more about the cycles in the trucking industry, we have a blog on that. So we'll link that in the description. But what you're talking about is this seasonality of trucking, right?
Yeah,
Those first couple of months of the year tend to be the lowest months for the trucking market. And then it picks up as produce starts coming out in the springtime, then things start picking up a little bit more.
exactly. And one of the most important metric that we'll track out of these three indexes is the rejection rate. The higher the rejection rate, the better the spot rates are. Our target will be if we can get to 10 at some point this year, that would be a good signal that we're in a good state.
For sure. All right, let's get into these top stories. So each of us is going to bring every week a story that we think is the most important story in trucking for that week. So today I want to talk about predatory towing. This has been something in headlines for a couple of weeks now, but we have seen a rise in predatory towing horror stories ranging from thousands of dollars for a simple boot removal all the way up to over $100,000 for a single tractor trailer accident. So, this is a huge problem in the trucking industry. It's not anything, the problem itself isn't new. But what is new is that the FMCSA has started to call out these fees that are charged to truckers. The DOT chief also called out predatory towing. It seems like there's a little bit of political momentum at the federal level, and the FTC is actually proposing a new rule that would stop businesses from, quote, charging hidden or bogus junk fees by requiring them to include all mandatory fees when quoting a price. So, Gurvir, can you talk a little bit about the situation around towing when you had your own trucking business? What was that situation? How did you deal with that?
Yeah.
And what were the consequences of that?
No, this is pretty much known in the industry that towing companies can be very predatory. You're always hit with a surprise bill. I've been in that seat a couple of times. We had a truck driver in New Jersey once, and there's a low bridge, and he hits a low bridge, and there's a towing company few feet away that just comes to the rescue, and we get a huge towing bill. There were no signs, by the way, at that low bridge. Who knows what shady things were going on there? And there seems to be a towing company right there. I
Yeah,
believe
that sounds a little too perfect, right?
yeah, I remember somebody told my driver that was probably the 100th accident in that exact spot. So that's a money-making machine
For
for
sure.
that towing company. But yeah, towing companies are notorious and you're never giving up a straight rate up front. If you get stuck somewhere and you need towing help in a bad weather, there's surcharges for that. That can amount to thousands of dollars. I recently saw a case yesterday where there was a cargo claim, a truck was damaged, and the towing bill was just $30,000 just to get the product out and redeliver it. These are immense costs. And a lot of the times, the trucking companies are stuck with this because the insurance might only cover up to $10,000, right, for the
Right.
towing. So I think this is a huge predatory practice. I'm glad someone's looking into it. I guess it was hurting the big guys and the big companies because I know owner operators and small fleets have been paying this price for a long time. And I think there's a couple of things that you can do, and I think we'll talk about those in order to protect yourself. But I'm glad like the FTC and these agencies are looking into how to bring more regulation because this is a space
Yeah.
where that is unregulated, and hence you saw a lot of predatory practices.
For sure. One of the problems, and we wrote a blog on this on our website, so we'll also link that in the description here. But one of the reasons that they can kind of get away with this is that companies tend to be pretty spread out
Yeah,
across the country, right? So you can break down anywhere. You could have an accident anywhere. And you're very likely, if you're out, especially in a rural area, you might only have one or two towing companies in that area, right?
yeah,
And so they have almost a monopoly over their little area. What complicates it further is that that also means that there aren't ton of incidents for those towing companies to go and get dispatched to.
Yeah.
So they have to make their money on individual incidents. So
Yeah.
it's a huge issue, and there are a lot of bad actors out there.
And also
And
in Carolina, in some states, I think the state police actually contracts out like who's responsible for what breakdowns where. So I think
yeah,
some of these things.
they'll do like a round robin of the
Yeah.
different providers. The problem is that there's no regulation to what criteria they use
Yeah.
to create those round robins and select the providers, right?
Yep.
It's just kind
100%.
of, oh, we're going to be fair, we're going to do it to each,
Yeah. And they have a lot of leverage, right? Like in one of our cases at one time, our truck was towed to a yard and they wouldn't release it. And
right?
there's nothing you can do, right? So they're in a position to essentially make any rules and the trucking
Totally.
companies have to follow it. And there could be any surprise charges and they just hold on to the truck. And I think they can put storage fees on the truck. So
Yep.
what happens is that
Daily
you can
fee.
just daily fee until you can, I think, bypass the lane and you essentially own the truck. So either way, they're the winners in this, right? The towing companies. Yeah. So it's very predatory in some cases.
Absolutely. And pretty much if you look at the higher ups in these two industries, trucking and in towing and recovery, everybody agrees that they should at least release the freight immediately, right?
Yeah.
But one of those predatory practices is that they'll hold on to the freight,
Yeah.
put
They'll hold on to
pressure on
everything.
you because they know that your customer is waiting for that freight. And so they can hold that freight and get you to pay. And so that's one of the areas that we might want to see regulation, even if everybody agrees in theory that that should happen. Unfortunately, there's just not a lot of recourse for someone to get their freight or trying to get their equipment back.
Yeah.
And for a bigger trucking company that has a bunch of trucks and a bunch of drivers, having one truck down is really inconvenient and bad for your bottom line. But if
Yeah.
you're an owner operator or you have 2 or 3 trucks, it could devastate your business. It could close your business if you have
100%.
your truck out of commission for more than
Totally.
a couple weeks.
Yeah,
So,
that's why I would try to pay those charges with a credit card. I know some of them don't
mm,
take credit cards because credit card charges you can dispute later. That's why a
sure.
lot of them ask for like a cash or wire or ACH or Zelle
Yep.
because you cannot dispute those charges.
Right. If only to just get your truck back, right? Get your
Yeah,
equipment back. So if this has ever happened to you, you are not alone. The American Transportation Research Institute did a study on this and found that more than 80% of the carriers surveyed said that they had experienced excessive rates and unwarranted additional service charges for towing. And they also analyzed thousands of invoices and found that almost 30% of them were found to have excessive rates and excessive additional charges. The good news, the glimmer of hope here, is that there are some states taking action and there are some groups that are pushing for action by state because when towing is regulated, it's generally regulated by the states. So there's a new bill in Florida that would require counties to set maximum towing rates. Maryland, for example, has already done this. And there's a new bill in Missouri's state legislature that would require them to give itemized receipts, which is something that a lot of legal experts encourage because then that helps you identify what are the excessive fees and what are maybe even the duplicate fees. If you've ever heard that advice about medical bills to get an itemized receipt so you can notice any mistakes, same goes for towing practices. But so we have this glimmer of hope in state legislators, hopefully with the FTC and the FMCSA and DOT calling this out. Also, don't wait for political change to protect yourself from these practices. So, yes,
totally.
be involved, write to your representatives, have a voice there. But also, there are some things you can do to try and avoid these predatory towing situations,
Yeah.
which is pay with credit cards you can dispute.
Yeah, but also I think mainly more importantly, understand your coverage. I think a lot of
Right,
the insurance coverages only allow up to $10,000 for towing fees. That means you have to come up with the remaining. Maybe look at increasing those, pay a few dollars extra for your insurance policy to get a higher coverage. A lot of them I think have a cap, so they won't do that. But I think understanding that is very important so that when you're getting your bill, you know exactly what the insurance company will be paying, what are you paying.
right.
Sometimes a lot of drivers assume that this is everything's covered by the insurance. And then if there's a cargo involved, I think some of the towing charges can be paid by the cargo. So just understanding your policy and who pays for what is really important. But always check with multiple towing companies. In some cases, you don't have no control, right? The state troopers will just call someone. They won't allow you the opportunity. But I would say in certain cases, talk to a couple of towing companies and try to get the best price up front and
And
document
also,
everything and get an itemized receipt.
And also ask. Like, don't
Yeah.
assume that you can't call your preferred towing network,
Yep.
right? Ask if you're on the scene of a incident and you need it towed and the state troopers are kind of taking over the situation, just ask them. Don't assume anything and also find a good towing network today. So before anything happens, don't wait for an accident to find a good partner. There are some towing networks that have transparent pricing, upfront pricing, and they'll, be able to cover you. And also in your when you're choosing insurance and coverage, don't just go for the absolute cheapest coverage
Yeah.
because yeah, you're paying less, but there's a reason that you're gonna pay less. It's probably because you're gonna pay more in the future. So just be
Yeah.
really smart about that. Know that the average towing bill is over $11,000. So if you only have $10,000 in coverage, you're already just for the average bill, you're gonna pay more than $10,000 for that. So
Yeah.
just know that upfront. Get itemized receipts, document everything if you're on the scene and able to take photos, take videos, record what equipment they dispatched, record how much time they were there, what time they came, what time they left. Because a lot of times, towing companies, if you didn't document all of that, could just lie on your quote, right? And say that they were there for 4 hours when they were really only there for two, or say that they sent five people
Yeah.
when they
When
really only
30
sent
minutes is
three.
also costing a few $1,000s, right? That could really
For
move the
sure.
needle. But no, I think those are great suggestions in how you can protect yourself.
For sure. All right, Gravir, what do you think was the top story in trucking this week?
Yeah, for me, I'm bringing in a story where the state of New Jersey is hiking the insurance minimum to 1.5 million for liability. Now, this is big news because insurance is a huge cost for trucking companies, and this tends to put a lot of people out of business because they don't maintain their safety scores. And then in a few years, your insurance goes really high, or the insurance company decides to not insure you anymore, which essentially presents a huge risk, and you cannot operate anymore. 1.5 million is the new requirement in New Jersey. Again, it hasn't been enacted. It's not a bill or a law just yet, but the state is really looking to introduce this. What this means is that if your vehicle is in excess of 26,000 pounds, so if you weigh more than 26,000 pounds, you're going to need to have $1.5 million in liability insurance. This could lead to about 40 to 60% in increase in premiums. And there's a new article that came out by Freight Waves that sort of elaborated on this, which highlighted that this essentially means that you're probably going to have an umbrella policy. So your liability policy probably doesn't have to be like at 1.5. The FMCSA requirement is 750,000. So you probably insure like $1 million, and then you might have to get like an umbrella policy. There's still some questions regarding what about out of state trucking companies? Does this only apply to intrastate or interstate companies as well? That is still unclear. But let's keep a close eye on this because if this translates it into other states, you could see a trend where the 1.5 becomes a new requirement. And that would mean there's a higher premium and cost for trucking companies and owner operators. Again, this is all because of these sort of high amounts of liability that you've seen in trucking, right? Like the bombshell payouts in trucking. You've seen these ads on highways that, hey, if you get hit by a truck, call us. And these law firms and lawyers specialize in trying to get the highest outcome.
Right.
So the insurance companies are struggling that these payouts have been actually increasing over years and years, which has also led to high insurance costs. So this is all bundled together in what this means. And maybe the state wants to protect those civilians and the citizens. Hey, if you are involved in a commercial accident, we need to increase the liability because a lot of the times, if the liability is only $1 million, you could be involved in an incident where your liability is more than 1 million, right?
Yeah, this is huge. I wonder if it will lead to people trying to move out their business out of New Jersey. Not a big
Probably.
state, not a
Yeah,
big
not a,
leap to go
yeah,
across the border to another state, or if it applies to everybody who's driving through New
yeah,
Jersey or
yeah.
delivering to New Jersey, that could
Hopefully,
be a much bigger
hopefully it's a
impact.
surplus line and it wouldn't cost much. So that means in any incident that it does reach over $1 million, the surplus line can kick in and cover the remaining. So
Yeah.
again, I think we'll continue to unpack this more as we get more news.
For sure. Super important. If you're based in New Jersey, also let us know you think
Yeah,
about this new policy and this new change. All right. So every week, we're also going to go through some questions that we find on the always famous Facebook groups of trucking. A lot of the trucking community uses Facebook groups. to get advice, comment on new legislation or other people's actions in the trucking industry. And I found a great one from someone who's just starting out. So this comment comes from an owner operators group. And he says, I recently obtained my authority. I have a 2014 Freightliner Cascadia that runs great. I have less than 2 months on my MC number. I have a dot number. My truck passed an inspection and I have my BOC3, paying for insurance, and I've got about 18 months experience as a CDL Class A driver. I need to find a way to get loads. I bought the DAT load board, but when I call brokers, most say my MC must have more than 6 months on it. I'm not looking to scam anyone and wouldn't even know how to. I'm just looking to pull some loads and start making some money. Tried calling several, I think he means dispatchers, that said I could use their services, but most of them speak broken English. If anyone could help me find somewhere to start, it would be greatly appreciated. So, Gurvir, what advice do you have for our friend here who is just looking to get started in the trucking industry?
This is always a tough one. I think when you start your new authority, a lot of brokers don't accept you. It's a challenge. I think my suggestion would be create a list of brokers that do accept new authorities and try to do as many loads for them. Find out dedicated freight from
Yeah,
them. You're probably not gonna get the best rates, and you have constraints. You can't work with everyone, but just get through those 6 months. Just trying to work with brokers that do accept new authorities. And after 6 months, your doors will open up to a lot of the brokers, and then you can build relationships and get more freight. But this is a struggle period for the first 6 months if you're a new trucking company. So I think that would be my suggestion. Make a list of the brokers that do accept new authorities. I think we've done a blog on it and we'll share that. But I think there are a few brokers that do accept the new authorities. Sometimes carriers want to acquire an MC, but that's challenging because you also acquire their safety records, you also
sure.
acquire their loss and runs, their accident history, or whatever other stuff that goes on with the trucking company. So you want to be very careful that when you are acquiring an MC, you look at their loss and runs, their safety records, because that will impact your insurance. I don't think there's a point to acquiring an MC with a bad record, and now your insurance costs are 3x more, but you're getting more loads, right? And your costs are not going to come down for the next 2, 3, 4 years. And now you have the challenge to bring the safety scores down. So you want to be very careful on which MC you're buying. There's also a lot of fraud around MC. So you want to be able to do your due diligence and make sure who are you acquiring the MC from. But I would suggest that, hey, keep your MC, keep your record safety clean. The market was better. I think this wouldn't be a big of a challenge. In 21, 22, you also see brokers start accepting new carriers. Now that brokers don't need as many trucks, they bring this rule back. And there's also a lot of fraud going on into the industry. So you have to
Right.
understand how brokers are thinking of this. New MCs, they have to see how long you're going to last in the business. Are you a real company? Are you not? And one thing I would say is that for people that don't have inspections, you can voluntarily go into a scale house and get an inspection. I think that those are all positive signs when you're working with a broker. And lastly, if a broker doesn't accept new carriers, push them for it, right? Try to convince them that you are a good carrier, you have an inspection, and whatever details they need, you are willing to provide to them and see if they can make an exception. I think sometimes brokers can make an exception there.
Yeah, absolutely. I would say that rule that, oh, we don't work with carriers with less than, 6 months of experience. But if they're in a bind and they need to move a load,
Oh
nope,
yeah,
they're gonna
yeah,
do it, right?
yeah.
They're
They're
not
gonna
gonna
do it.
not move a load because of it.
No,
The other question that I would ask is how are you presenting your business? So, how are you making sure that your business appears as legitimate as it is, right? So, clearly, he's knowledgeable or aware that there's a lot of scams and freight fraud out there. So, how are you differentiating yourself? Are you making sure you have all of your papers and documents in place to be proactive about providing those things? What are the things that you can do and set up to make your business look really good? Do
yeah,
you have a branded domain for your email? Do you have a simple website with all the information for your company? Do you have your VINs on your certificates of insurance? Are you signed up with a factoring company that's already verified your identity, right? So, all of these things can
yeah,
help you look more legitimate in front of brokers. And just like you need to do that due diligence on brokers before you take a load, they're doing due diligence on you to make sure that you're not a scam, right?
yeah,
And so it goes both ways, and you have to make sure that your business looks really professional and legitimate. Okay, this is a post that I found in a box truck group that I just loved. She says, transparency post, not afraid to admit that I failed the first time going into trucking. Why? One, I wanted to run my business like a hobby. I wanted passive income like it was real estate. Two, because I ran it like a hobby, I hired a dispatcher and said, find me loads. And of course, they weren't always in the best interest of my company. I didn't keep up with market trends. And four, I wasn't making enough time to always review my finances, make changes, and adjust my strategies if needed. I took every lesson and learned. 6 months later, I went into this fully immersed. I built solid relationships with brokers, hit the pavement for local work, and diversified my business. I have trucks dedicated to Amazon, OTR, local contracts, and appliance deliveries. Keep grinding. So I just loved this post because I think it's really important to understand that most trucking businesses do fail in that first 1 to 2 years, but it doesn't mean that you failed as a person. It just means that the way you were running your business failed, and now you can try to do something, either do
Yeah.
something else or try again and
Yeah.
and try to get into it again. And she's found a lot of success the second time around.
Yeah, no, this is I love this too. I think a couple of reasons. One is that she learned from her experience on why she failed, and second time she actually changed things to
Right.
get a different result. Key thing, having run a trucking business, there's no such thing as passive income in trucking. You have to be fully involved. You have to get out there. You have to build relationships. You have to keep your safety in order, keep your insurance costs down, and you can actually create a successful business. But it means that you have to get involved and you have to do things. There's no such thing as just buying a truck and getting a dispatcher and letting them do all the work and while you're going to earn residual income every month. That does not work. She also points out that she hired a dispatcher that didn't work. This is one of the most important things in your business: building relationships, finding loads, finding business. You can't be outsourcing that part. Nobody's going to do this better than you for your own business, and you have to be your own dispatcher. If you're an owner operator, I can see how you can get away with it because you're the one driving truck. There's a little bit of margin there. But if you're running a trucking company, you are the dispatcher. This is the core of your job. So I absolutely love this post. I think there's a lot of learning here for all the newcomers that are coming into the industry and how you can succeed.
Yeah, absolutely. All right. Well, thank you so much for joining me again this week, Gurvir, for This Week in Trucking, and we'll see you next week.
Awesome. Bye, everyone, and drive safe.